Okay, hello people. I'm gonna go through the price action from yesterday, and I'm gonna analyze that a little bit, and let's go. So we are on Euro USD here. Let's go to the daily. So what happened yesterday was that we saw this huge push to the upside here. Um, so yeah, yesterday was CPI news day. So we were kind of expecting some kind of um, reaction reaction strong move to the downside or to the upside. Now we saw Euro USD going to the upside, DXY going to the downside, obviously. These previous days, what had happened here before was that uh, I've noticed this before, and I've notified this before. But yeah, we have this fair value gap here, respecting market respecting that very well. And now, what CPI could have done, it could have easily taken out this liquidity, I feel like, and then it left like a little bit bigger wick, and after which it could have left like a little bit like this. You know what I'm saying? Obviously, it didn't do that, but it could have done that. And there is also this fair value gap here, like CPI could have easily filled that fair value gap like this, mitigating that one or something like that. Obviously, yeah, we didn't see that happening. CPI came out very bullish in EU. Now I was expecting higher prices since we have been breaking highs, respecting fair value gaps to the upside and stuff like that. So when we kind of create this kind of choppy market structure to the downside, respecting this fair value gap, I'm expecting sometime soon here market reacting strongly to the upside, and that's what we saw in that CPI day. Now we came up in the CPI. We came up to this order block, and as of now, today's candle is reacting off of that order block. Maybe we see a little bit pullback. Maybe we want to sweep this high. I don't really know, man. But if you look at weekly chart, this interesting that you can see here is this weekly inversion fair value gap. So, and I was kind of monitoring on that, like maybe we could see a reversal out of that area, and I will present you the idea in the lower time frame soon. But yeah, from this inversion fair value gap, I was thinking like, okay, we've been breaking these internal highs here. Maybe market wants to, after strong push to the upside in CPI, maybe it wants to pull back a little bit. And yeah, I traded through this inversion, but obviously it can still respect this inversion because the weekly candle hasn't closed yet. So maybe the end of the week, today's Wednesday, tomorrow Thursday, and stuff like that, we are seeing this weekly candle diminishing and pulling back a little bit. That's how I feel that it's what is gonna happen during the rest of the week. And yeah, looking at other fair value gaps in weekly, what I can conclude is this one. I don't really know. Yeah, we're quite close of that. What happened there is that we traded through that, used that a few times as an area to bounce off from, and then we trade through that again. So I don't really know if this is valid, but this is certainly an area that you could look a reversal from, especially when you see this high here. That it's possible that market wants to sweep that high, and just after go short. But yeah, I think we are gonna see some type of pullback to the downside, whether market wants to take out this high or not. So we are gonna see pullback anyways, whether this happens or something like this happens. So it's okay. I feel like so we should be short on EU on a short term, short um, shorter time frame basis. Obviously, yeah, longer time frame. You, if you wanted to swing or something like that, you would take longs from somewhere here, somewhere here, obviously. Okay, let's go to 4 hour chart. So yeah, what I have identified here is all of this video raise weekly inversion, this order block that we have mitigated. And yeah, this daily. Let's move to the 4 hour chart. So yeah, here you see our inversion, order block. Here, if you look at these highs here, 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 these are the internal highs that include a lot of liquidity, and market wants to take those out. So if we kind of mark, like, let's say this one, let's mark that one out. So that's your high, and if you actually look at that CPI yesterday swept exactly that one. Let's just measure that in pips. So it's 5.8 pips. That's not the absolutely strongest one, but I guess that's good enough. So we could definitely go short from here, sweeping this high in this order block. That's how I definitely feel like. So, but yeah, back to the price action from yesterday. We saw this great push up. Let's go with the sessions, Asian session range. Let's put that indicator on. We see that in the lower time frames soon. But yeah, what we saw in here yesterday was that London, sorry, so this is the hourly chart. So we were kind of ranging here in Asia, and then we started to react to the upside in London, and we took out this high. Now, at that point, I'm kind of thinking like, okay, we had strong move up, choppy move down, so there is a possibility that from somewhere here we want to shoot up, which actually happened. But as well, there's some liquidity being built down here, and it's not 100% necessary that we want to go up. Now the up movement happened, in my opinion, only because the CPI was bullish in EU. Other than that, we could have seen a push to the downside maybe, and maybe take out this liquidity, deeper mitigation to this order block, and then from there push to the upside. Okay, so had I traded in London, I could have considered going short after sweeping this high. Now obviously I'm trading M5, M15. This price action doesn't suggest that you should go short nor long, nor like you shouldn't do anything basically in this. Like maybe M1 could have presented you a short position from this price action. Let's look at that actually. But yeah, I'm not comfortable enough in trading M1. I'm not experienced enough. I'm not just equipped to trade the M1 that well. And actually, if you look at M1, okay, things that you want to see, you see sweep here. Let's take that one out. So you see sweep. That's a good thing. Okay, you see somewhat of a strong push to the downside. It starts to the push and the candles start to become a little bit more choppy in this area, which is not a good sign, and we are not able to push below this low. So you wanted to see break of structure below this low, and you saw that, but you didn't see a displacement, which is the most important thing that you need to see. Basically, you didn't see a displacement, so this is absolutely invalid setup. So this is just a no trade, no trade in London. Then we push low, start to build some choppy market structure again. Then the New York session comes in. Look at M5 candle. CPI absolutely sweeps this liquidity to the downside before it absolutely shoots up. And yeah, I was active during this CPI. Obviously not trading, but reading the price action stuff like that. When we push this hard, I'm like, okay, there is a possibility that from some of these PDRs I could see a short from, for example, this inversion in weekly. We started to become a little bit more choppier here, and the kind of the similar energy didn't come up here. But yeah, we didn't really see a market structure shift nor a push down or anything. We kind of became a little bit choppier, but we continued building structure to the upside, and yeah, the theme of the day was just that market clearly wanted to take out, clearly wanted to take out this high, and it just did not want to start pulling back before that high had been swept. Now it's swept, okay. So let's look at this. So now the high has been swept. What happens after we see, immediately after we see push to the downside? Do you see like proper market structure shift? And M15, this is actually decently valid now. So more often I would like to see a breaker. So this would sweep this one high once more and then see a breaker. Now this is only a mitigation block. This is not a breaker block. But it's good enough because the M15's market structure shift happens like this. So you could have taken your entry from the mitigation block / fair value gap there, maybe the mean threshold, consequence, why you want to call it. What do you want to call it? I don't know, but you would have your around 12 pip stop there. Keeping your stop now here, you can see in hindsight that would have been taken out, and many people could have their stops here, but I would usually rather have it here because this is exactly the thing, guys. This is the mitigation block. If this was a breaker, this would obviously be higher than this high, so then it would obviously go over this high. So that's the reason why I usually like the breaker block much more, and that's like a better confluence. But this is good enough. And if you look at this price action in M5 as well, this price action, by the way, happened during the night, so I'm not expecting anyone to trade this if you're not in Asia or something like that, trading Asian session. So yeah, push to the downside, break of structure there. So this is basically the first fairly valid setup that happened after the CPI. Break of structure, entry somewhere there. And if you look at this, strong move down, strong push down, and when market starts to come up, it's very choppy, it's very corrective. And what that tells me, that the trend is downwards, because if the price action to the downside is very strong, energetic, stuff like that, and price action to the upside is very choppy. That tells me that the trend is downside. Now, here we had a kind of failure to break down this low. We came, retested this area here, took some liquidity there, respected this order block, and then absolutely dumped. So yeah, had I taken this trade, where the target would have been? Well, I like to trade this way, so 2R 2R would be, depending on circumstances, it would be at least trailing soft to the break even in 2R. That's my first thing that I need to do. And in 2R, depending on the circumstances, I also take a part of the profits out usually. But yeah, I would say that it's possible that we come down all the way down here, because there is a lot of room to run in here for the markets if you look at this and think about that. That also breaks structure in hourly chart, so probably what's going on right now is that we pull back to the upside, and then we could smash the downside back again, or take some liquidity and then go to downside. But yeah, that is what markets are doing right now.